Euro dollar. So it's unclear at this point whether the euro is poised for a bearish reversal and continuation of the downtrend following the latest setbacks off recent highs this week around the 1130 area. At this point, we're going to need to see a break back below that recent low at 108.09 to confirm and accelerate declines, while a push back above 1130 would expose a retest of that recent July 10th 1215 high further up. Sterling dollar. So cable continues to show signs of being constructive over the past several weeks, with the market potentially putting in a higher low at 153.50 ahead of the next major upside extension back towards that 2015 high at 159.30. At this point, only a break back below 153.50 would take the immediate pressure off the top side and negate the current bullish outlook. Dollar yen. So dollar yen has done a good job recovering in recent trade, with the market pushing back above 124, although there is some solid internal resistance at 124.50 above. Look for the market to continue to find resistance up towards 124.50, with only a close back above the level to open the door for a potential retest of that key multi-year high from June, which comes in at 125.85. A break back below recent lows that we saw this week around the 123 area would put the pressure back on the downside and accelerate declines. Euro Swiss. So Euro Swiss remains constructive after the market broke out for some key range resistance at 105.75, and the focus for now is on a next test of that February peak, which comes in at 108.15 further up. At this point, initial setback should be very well supported into that previous resistance at 105.75, though ultimately only a break back below 104 would take the immediate pressure off the top side. Aussie dollar. So Aussie dollar saw a bullish outside day earlier this week on Tuesday, with the market potentially looking to carve out some form of a short-term bottom after being well beaten down in recent trade. Still, the downtrend remains firmly intact, and any recovery rallies that we do see should be very well capped in favor of a lower top, ideally around the 76 area, ahead of the next major downside extension towards key psychological barriers at 70. Dollar CAD. So dollar CAD finally stalled out after posting fresh multi-year highs just over 131, with setbacks extending thus far, trading down into the 128s. At this point, there's room for deeper setbacks and more of a significant correction down into the 126 area, though it's clear the uptrend remains firmly intact and the market is only now just trying to put in a higher low ahead of the next upside extension and a bullish continuation. In Kiwi dollar. So Kiwi is trying to maybe put in some form of a short-term base, with this market also trading down to fresh multi-year lows, and the market could be poised for additional corrective upside towards the 68 area over the coming sessions. Still, the market ultimately should be very well capped ahead of 70 in favor of a lower top and bearish continuation back down below those recent lows just under 65. SPX 500. So the S&P 500 has been comfortable trading back into the mid-range, with the market now trying to figure out whether it wants to carve a longer-term meaningful top. At this point, it looks like we are carving out some form of a longer-term top, and the market will need to trade back below that critical March low that has been so elusive at 2040 in order to confirm and accelerate declines. Any rallies, however, back above that May record peak at 2137 would negate and open the door for fresh record highs and a fresh upside extension. Gold. So not much going on with gold this week after the market settled in following that intense breakdown to fresh multi-year lows below 1100. At this point, the market would, however, need to take a trade back above previous support at 1142 to take the pressure off the downside, and until then, there's risk for additional declines in this market towards next key psychological support in the form of the 1000 barrier. However, daily studies are oversold and there is risk for some form of a short-term bounce.